The views expressed on this podcast are those of the participants, not of Reuters News.
America and China have had a fractious relationship in recent years. Still, countless recent US presidents have expressed a contradictory view on the world's second largest economy, sometimes referring to it as an adversary and sometimes thinking of it as a partner. But Donald Trump's presidency has killed off a lot of that ambiguity. Enormous trade tariffs have now been erected by both economies, and the implications of this breakdown in the Sino-American relationship is the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with Breakingviews columnists every week. And I'm your host, Amy Donlan.
And I'm Jonathan Guilford. Amy, feels like we've been discussing the fallout from Trump's April 2nd tariffs for a lifetime. In fact, it's been about 3 weeks. There's still a lot more
Feels
to
like
cover.
forever.
It's never ending. And of course, it doesn't help that the tariffs themselves change and the ostensible policy goals change. But even within that all, I think really the through line from even Trump's first administration, right, is the idea that the rise of China is this thing to be checked. Like, that's at the heart of Trump's agenda. And every U.S. trading partner obviously has been hit with enormous levies, but China's tariffs are far higher, at least as of the time of the recording of this podcast on Tuesday, April 22nd, when additional tariffs on imported Chinese goods have now reached at least 145%. And of course, those rise a little bit higher depending on which category of goods you're talking about. Meanwhile, China's President Xi Jinping has pledged to fight to the end with America. Amy, I'm just kind of wondering, like, what's your take on this situation? Because in some ways, it feels like the tariffs on every other country are really about kind of trying to align everybody around this China question.
Yes, I would think that's true. And I think if you were any of the countries that had been targeted with these tariffs, I think you would certainly feel like you were a target. I think if you were Vietnam or Europe, even for that matter. Now, obviously, we have this pause on the tariffs, and they've kind of gone back down to 10%. But that this is still very much hovering over so many economies. But yes, it does feel like this fight, the real fight, is between the US and China. And thankfully, we have two China experts with us today that can kind of talk us through this, because I have to say I'm really curious to know what the markets are sort of expecting out of this fight, as in, worst case scenario, it ratchets up even further, causes really like an awful lot of economic damage to the world, or it gets resolved or toned down. So Una Galani, Asia editor of Breakingviews, and Hudson Lockett, our Asia-based columnist at Breakingviews, you're both very welcome to the Viewsroom.
Pleasure to be here.
Hi, Amy.
So Una, can you start by talking us through, I mean, this has obviously been a very long relationship between these two countries, but maybe in the more recent years, what has been going right and wrong between these two countries, and what previous presidents, so Barack Obama and Joe Biden, what has been their view? What has there been like their strategy when it came to China and trying to contain it?
Yeah, it's a great question. I think it's fair to say that a lot has been going wrong with this relationship for a long time. When China first joined the WTO in 2001, President Clinton was talking up how this would bring about economic reforms in China, but things grew fractious very quickly on the trade front because China continued with its investment-led development model, which meant that it kept producing all these cheap subsidized goods, and it failed to comply with WTO rules. And then, of course, President George Bush came in. He imposed some tariffs to try and stop the Chinese dumping. Obama continued down the same path, using some tariffs and also trying to use those tariffs to change China's behavior on trade. But it was very interesting because he called China an adversary, but he also balanced that by explicitly saying that the US wasn't trying to contain China and wanted to cooperate with China on all sorts of other things like climate change. Then you had Biden's administration, and this is when the small yard, high fence approach came in. And in here, the US tried to limit China's access to high-tech, strategic, sensitive goods, things that could potentially help the Chinese military. And they and they tried to cooperate on everything else. In between, of course, we had Trump's first term, and that was the first US-China trade war. But what Trump really did is he moved the narrative in Washington so far so that everyone is really now hawkish on China. So it's the one thing everyone can agree on. So while lots of people in Washington today do not agree with Trump's trade war policies, they do agree that China is a threat. And so he obviously started by trying to keep Huawei out of the US market. And I think to where we are now, it's very difficult to disentangle the US trade concerns over China from US national security concerns over China. And when you have that kind of situation, it's very hard to de escalate a trade war, because if the US doesn't want to sell China stuff like semiconductors and doesn't want Chinese companies to come and open factories and reshore in the US like they want TSMC to come and do, then you have a problem.
Right, and I was kind of wondering if you could tick through, just as a scene setter here. I know, obviously you wrote on this recently, but maybe if you both have thoughts about this on kind of like what this has meant for the actual like practical linkages between the two countries. Like, what have we practically seen change ever since the kind of like early 2000s period, when I think you did see like Chinese capital flowing into the US for certain kind of like major acquisitions and whatnot. You had like the beginning of sort of even just, let's say, cross-pollination of the media ecosystem, and like, kind of like Hollywood, you had Chinese investors coming into film studios and media kind of moving both ways. Like, it feels like a lot of stuff has changed since then, right?
Yeah, we've been actually measuring US-China decoupling, or trying to measure this enormous relationship between the world's two largest economies for a couple of years now. And what's clear is that the Sino-American relationship is in gradual decline. What Trump has done with his global trade war is he's kind of crossed the Rubicon now. So he's obliterated, or almost obliterated, a $600 billion trade relationship between these two countries. Now, you can get into the details here and say, okay, maybe the US imports from China will prove more sticky because they import more critical things like rare earths and other things that are harder to replace, whereas China's imports from the US soybeans and other raw materials can be found elsewhere. So, but that's the trade part of it. But even if you take away trade, there is a lot less left to disentangle. We've also looked at the corporate ties between these two economies, the educational ties, the investment ties. It's really interesting that when you think about Tesla, Apple, Starbucks, America's most iconic companies, they have actually got today a smaller share of their total revenue coming from China than they did a couple of years ago. And that's really interesting because Starbucks' store count is actually rising in China. It's just their profitability is not very good at the moment. And then if you take the flow of people, if that's any guide to where a future bilateral relationship might go, then you look at how many American students are studying in China today for academic credit, and it's woefully low. It's 469 US students. That's like near a 20-year low, and the flows in the other direction are in the hundreds of thousands. Interestingly, this last year was the year that there are, for the first time, more Indian students studying in the US than there are Chinese ones, which is very interesting because a lot of people are optimistic about where the US-India relationship will go in this new trade dimension. And then the final thing we looked at is on the financial side, right? So this is where it like might get really tricky and hard to unwind. So there's some stuff that's easy here. So you've got some 300 listed Chinese companies still in the US. That's kind of a problem, but a lot of them have been doing these secondary listings in Hong Kong, so they've kind of got a fallback plan if they are delisted forcibly from the US. Chinese equities, I think global mutual funds have been reducing their allocations to Chinese assets for a long time now, and we're seeing that sort of seep into private equity allocations and sort of a separation really of Chinese and US money on that front. Elsewhere, though, the exposure of US banks to China is really interesting because that is at an all-time high of $150 billion. But we've been told by the top CEOs that these exposures, although they're high, they're actually easier to unwind today than they were a long time ago. And then, of course, you have the treasuries. I think it's $1 trillion odd dollars of U.S. treasuries that the China owns, and that is a big headache. And we've been seeing that play out. The concern about whether China would weaponize those play out in the markets today.
I think, Hudson, this would be a great time to bring you in here, because there is this really interesting bond angle to this situation. And I know that you wrote a piece kind of exploring, which side could press the financial advantage here. What is your view on that? I mean, can as Una said, I mean, is that really a possibility for China to kind of go nuclear, in a metaphorical way, of course, about basically kind of like abstaining or going on strike when it comes to treasury sales, or even dumping some of its treasuries, and vice versa? What's your kind of take on all of that?
Yeah, so this has been sort of a long time brewing, like for many, many years, like, decade and a half. Investors in the U.S. and hawks in Washington have been sort of fretting over whether China might one day weaponize treasury holdings. And as Una says, that's about $1 trillion worth of them. And now that we're well into a trade war, and the impact of triple-digit tariffs in both directions has pretty much been exhausted, trade's just not going to happen. So worries are mounting that China, as an alternative form of leverage, could dump some, or in a nuclear doomsday scenario, all of its treasuries to spike U.S. interest rates and put the squeeze on Trump, either during negotiations or sort of just to punish the White House. Or in a less extreme scenario, maybe China just opts out of buying new treasuries when the U.S. is auctioning more to fund rising government expenses. I think that is the fear. I think the reality is that China's central bank has been pulling away from treasury auctions and paring down those holdings naturally for years now. And at its core, that shift really just reflects a pretty rational desire to diversify the country's foreign exchange reserves and maybe better reflect the importance of other trading partners. Now, I do think that China would probably prefer to hold a lot less U.S. debt than it currently does, and the U.S. probably wouldn't mind that either. But I think the big catch there is the yuan, which Xi Jinping himself has made clear he wants that kept relatively stable and strong. And while China has a pretty diverse tool belt for managing the yuan's dollar exchange rate and sort of scaring off speculation on a fall or a big surge, those more indirect tools really ultimately do need backing from a fat stack of liquid dollar assets that the central bank can sell in an emergency and sort of stop the yuan falling if it gets sort of out of control and dives faster than usual, or faster than sort of these indirect measures can handle. And so that's the sort of fundamentals there that make this decoupling, at least when it comes to treasury holdings, much more difficult. But even theoretically, if China did want to sell off even just a decent chunk of treasuries to send a warning, going into negotiations, for example, like, it would probably trigger a global panic and send the value of their remaining holdings through the floor. And that would leave the People's Bank of China with less capacity to manage the yuan. So really it's quite a dangerous game to play, and I don't think anyone is super keen to play it.
I want to get a little there into sort of like the fundamental assumptions about why this is the state of the world, e.g. why the US has so much outstanding debt and why China holds so much of it, right? And I think broadly the kind of schematic idea is the USA is a consumption-led economy that exports essentially a kind of financial regime to the rest of the world. And so kind of thus, like, there are a lot of like capital flows coming in, like it runs big like twin deficits, a trade deficit and a just primary fiscal deficit. And all of those treasuries are kind of like soaked up by the rest of the world, and particularly China, which is, kind of in this schematic, like a mirror image of the US, right? An investment-led economy with a deficiency of domestic demand that requires the rest of the world to soak up its surplus because there isn't sufficient like consumption at home. And so you get a lot of kind of commentary about functionally like how each country has to change essentially to look more like the other, right? Like the kind of US insecurity is that it no longer has that kind of like investment-led like powerhouse like production capacity, and thus you get things like the push to reshore semiconductor production or what have you under Biden. And then, I think you get like a lot of Western commentators talking about how China must, stand up domestic demand, and that's the only way to kind of rebalance this. I am kind of curious. Like, I was wondering if you could step through, like how that persistent situation, kind of, I guess, puts the U.S. in an odd situation, like where you say it depends on these foreign holdings of U.S. government debt to kind of like support those deficits, but also be like, I'm just curious as to whether you think that kind of broad schematic is accurate. If that's like a correct model of the world, and if so, like whether it's even likely to change. I don't know if like Hudson, you want to start off, and then Una, you can maybe give us your thoughts.
Well, sure. I think in broad strokes, that is basically accurate, right? China is essentially financing America's deficit in an indirect way, fundamentally. But at the same time, I think that you can sort of pick at that argument in terms of, I guess, sort of economic fundamentals. You can say that, well, these are two countries playing to their comparative advantage, and there's nothing fundamentally wrong with that if you want to go sort of neoclassical. But I think it also sort of puts quite a lot of blame on China, and that's not necessarily placed incorrectly in terms of its sort of historical inability to get consumer spending up and running. I think what people kind of are dubious about right now is whether China, when sort of push comes to shove, China can really get that shift going at a faster speed. And so far, I don't think we've seen a whole lot of evidence that they are kind of putting the pedal to the metal. Una, I'd curious to hear what you think.
Yeah, Jonathan, I think you're absolutely right, which is, the US, we joke here, the US and China want to be more like each other. So Chinese households are sitting on tons of money, and the Chinese government's biggest problem is that people don't want to spend it. And, American households are like lots of debt, and all they want to do is spend the money. So we kind of joke about that here. But fundamentally, China has been an export-driven, investment-led economy, and Xi Jinping has talked about this idea of dual circulation, where you need to stimulate the domestic economy. You need to have a bit of domestic self sufficiency, which is borne up through domestic consumption. And 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 we've been talking now since the pandemic, really, about whether China will pull the trigger on huge stimulus domestically that will give Chinese people the confidence to go out and spend their money, because they have it. They just don't want to spend it. So the debate is always around, well, is that, what can they do to support the property market, because the property prices have gone through a huge correction and are still finding a bottom, and most Chinese households, to the extent that they have assets, it is largely in property. So they're also making a big effort to try and prop up the stock market. But I was talking to somebody the other day, and they just said, if China doesn't do it now, like, who knows when they will? But it is now or never, really, to stimulate the domestic economy. I guess the one reason that China may still choose to hold back, and China's always thought about massive stimulus as potentially wasteful, and it sort of looks at its spending in the aftermath of the global financial crisis, and it doesn't reflect well on that, and it prefers to sort of hold back. But I think if China does stimulate now, I think it could go a long way. But they could wait, because if you look at what's going on in the US, it feels like bond market investors have Trump increasingly sort of moving into a corner, and they're holding his feet to the fire on tariffs and the trade war, and this sort of what's now morphed from a global trade war into a grand encirclement strategy against China. Let's all rally against China and pull other countries into our orbit. And as you said at the beginning, it's like China becomes the sort of enemy number one in all of this. But if it comes down to really to timelines here. So we're starting to already hear Asian leaders, including in Japan, sound a little bit less willing to roll over in negotiations with the US. And don't forget, Japan is at the front of the queue, apparently, on negotiations with the Trump administration. So it really depends. I mean, if the US markets force Trump into a U-turn on some of these, another U-turn on these tariffs, or another pause or something, then Asian countries and leaders may decide to hold back, because who knows whether a lot of those tariffs are just going to fade away. I mean, if you look at the Chinese benchmark index, it's down just 3% since April the 2nd, Trump's self-professed Liberation Day, when he unveiled all the tariffs. The S&P 500 is down 9%.
I was just going to ask actually about that, Una, because I mean, I guess this is what I'm curious about. What is the market telling us about how this is all likely to end up? As in, as you said, it doesn't seem like there's really panic, which would suggest that maybe investors are imagining that this will, some sort of agreement climb down, however you want to refer to it, on both sides, that they will both kind of, I mean, I think listening to both of you, it's sort of mutually assured destruction almost if they both continue with this, right? That this is damage to both economies, and both economies are weakened already, you know?
The stock market in China is not the best gauge of things, really. It's never reflected. It never soared as China's economy rose, and now it's doing okay, even though the economy is not in a great place. I think that so you have to separate those two things out. China is also trying to prop up the shareholder returns that companies pay out. So and everybody is actually betting on huge stimulus. So they're just waiting there for the US for Xi Jinping to unleash that, and then the stocks will rally. I don't think that it's helpful to look at the Chinese markets in that respect. I think we look more at the yuan as the Chinese currency, as Hudson was just saying earlier. I think China has tried to maintain that stability and strength so that it comes across as a reliable trading partner for all of its other Asian regional partners, which the US is now trying to pull into its orbit. But in terms of where this goes next, I mean, I think it's really important to remember that the US has never announced tariffs and then rolled them back against China. I say never. I mean, I hesitate to use a superlative, but at least that's my understanding of it, at least on the high level things. So, and we know that we know that Trump and Xi have managed to reach a trade pact before, because they did that in 2020 when they had their first trade war. But the problem with that is that deal just did not hold water at all. China did not buy all the additional goods from the US that it was supposed to buy. It was trumpeted by the White House as an enforceable deal. I don't think anything was really enforced. So even if the two countries do reach an agreement now, I think a lot of people won't really believe it or have much faith in it. I think there'll be a lot of skepticism about any deal that can be agreed. I mean, who knows? Never say never. With some skillful diplomacy, you could have a deal, but I'm not optimistic in terms of the trajectory of the relationship between these two countries.
Skillful diplomacy, the watchword of the Trump administration from day one. All right, with that, I think that's a good place to leave it. Una, Hudson, thank you so much for your time.
Pleasure.